Welcome back to the psychology of execution. In our last session, we talked about thinking like a casino. We discussed the importance of trusting the math, embracing the variance, and playing the long game. But for many of you, knowing the math is not the problem. You know your strategy. You know the odds. You have the discipline to sit and wait. But when the moment finally arrives, when the setup appears on your screen, you freeze. You hesitate. You check one more indicator. You look at a different time frame. You check the news. You ask yourself, is this really the perfect setup? And while you are thinking, the price moves. The opportunity vanishes. You are left staring at the screen, frustrated, watching the trade work perfectly without you. This is called analysis paralysis. It is the state of overthinking to the point of non-action. It is the silent killer of profitability. Today, we are going to diagnose why this happens and how to cure it. Why do we get paralyzed? The root cause is not a lack of information. It is actually the opposite. It is an addiction to certainty. In most areas of life, gathering more information leads to better decisions. If you are buying a house, you want to inspect every corner. If you are choosing a surgeon, you want to know their entire history. In the real world, information equals safety. But in the financial markets, this logic is inverted. In trading, information is not safety. Information is noise. The market is an environment of infinite variables. You could spend 10 years analyzing a single price movement, and you still wouldn't know everything. When you suffer from analysis paralysis, you are subconsciously trying to eliminate risk. You believe that if you just add one more indicator, or if you just confirm with one more news source, you can guarantee the outcome. You are looking for the perfect trade. Let me tell you a secret: the perfect trade does not exist. Every trade, even the best ones, carries the risk of loss. When you wait for perfection, you are waiting for a ghost. The more you analyze, the more conflicting data you will find. Your 15-minute chart says buy. Your 1-hour chart says wait. Your RSI says oversold. Your MACD says neutral. The news says recession. You are flooded with data. Your brain cannot process the conflict, so it chooses the safest option: inaction. So, how do we break this paralysis? How do we learn to pull the trigger, even when we are uncertain? We need to introduce artificial constraints. If having too much information is the problem, the solution is to deliberately limit your information. Step 1, the rule of 3. Limit yourself to 3 inputs. For example, price action, volume, and 1 indicator. That is it. If all 3 say go, you execute. You are not allowed to look at a 4th input. You are not allowed to check Twitter. You are not allowed to look at a time frame 3 levels higher. By removing the extra data, you remove the noise that causes hesitation. Step 2. The good enough standard. You must abandon the quest for 100% certainty. Replace it with the 70% rule. If a setup looks 70% correct according to your plan, take it. Yes, it might fail. But remember the casino mindset? A failure is just an operating expense. Waiting for 100% certainty ensures you will never execute, which means you will never profit. Speed of execution is more important than perfection of analysis. Step 3. The 5-second countdown. This is a technique to bypass your hesitation. When you see your setup, your brain has a tiny window before fear kicks in. Usually, it's about 5 seconds. After 5 seconds, your mind starts making excuses. Maybe I should wait for the candle close. Maybe the volume is too low. So use the countdown. When you see the setup, count backwards: 5, 4, 3, 2, 1, click. Do not give your brain permission to debate. You are not a philosopher, you are an executor. There is a profound freedom in accepting uncertainty. When you accept that you cannot know the future, you stop trying to predict it. You shift your focus from what will happen to, did I follow my plan? If you follow your plan and lose, you succeeded. If you hesitate, miss the trade, and save money, you failed. Analysis paralysis is really just a fear of being wrong. It is your ego trying to protect itself from the pain of a loss. But you must kill that ego. You must be willing to look stupid. You must be willing to be wrong. The market rewards the decisive, not the perfectionist. Imagine a sniper on a battlefield. He sees the target. The wind is okay. The distance is okay. But he waits. He wants the sun to be at a perfect angle. He wants the wind to be exactly 0. While he waits, the target moves. The opportunity is gone. A sniper who never shoots is useless. A trader who never clicks is just a spectator. Stop trying to solve the market like a puzzle. It is not a puzzle to be solved, it is a probability to be managed. Clear your screen. Remove the clutter. Trust your eyes. And most importantly, forgive yourself for the imperfect trades. Because here is the danger. If you stay paralyzed for too long, if you miss too many winners, frustration builds up, anger builds up, and eventually that dam breaks. You snap. You stop analyzing completely, and you start lashing out at the market. You try to force a win to make up for all the ones you missed. This leads to the most dangerous behavior in all of trading. It leads to revenge trading, and that is what we will discuss in the next chapter. How to stop the bleeding when you are angry.